All right, let's get straight to it. A lot of people think swing trading is about, I don't know, catching lightning in a bottle, maybe predicting tops and bottoms. That's not what we do here. We are not in the prediction business. We're in the participation business, and we only participate in one very specific, very low-risk location. Today, we are going to focus exclusively on that location. We're talking about the pullback. This is the bedrock, the foundation, where a real professional swing trade is actually built. Okay, before we even look at a single chart, I need you to burn this into your brain. Read it. You are not paid to be right. You are paid to manage risk. Your ego wants to be right. It wants to predict the future. But your account, it only cares about how well you manage risk. So your job, from this moment forward, isn't about guessing what's next. It's about identifying a very specific set of conditions where the risk is as low as it can possibly be. And then you act. This isn't just a suggestion, it's a complete, non-negotiable shift in how you need to think about this game. So let's just make this crystal clear. What we're doing here, it's not prediction, it's not fortune-telling, it is simply participation. We identify a pattern that's already happening, an existing trend, and we look for one single, low-risk moment to join in. That's it. That is the entire job description. Okay, so if that's our job, let's define our workspace. What exactly is a pullback? We need a definition here that leaves zero room for interpretation, no ambiguity. Here it is. A pullback is a temporary countermovement inside an existing trend. And here's the most important part. It is not a reversal. Think of it like this. A trend is a river flowing downstream. A pullback is just a small eddy, a little swirl against the current. A reversal is the entire river changing direction. Mixing these two up is probably one of the most common and most expensive mistakes a trader can make. So we're going to be really clear on this. So price action isn't just random noise. It moves in a rhythm, really. It has two distinct phases. First, you get the impulse move. This is the big, strong, directional move. It's exciting, it gets all the attention, it's the move that makes you feel like you're missing out. Then you get step two, the pause, or the retracement. This is when the price just cools off. It takes a breath. It might even drift a little bit against the trend. Now listen closely. All of your work, all of your analysis happens during the pause, never ever during the impulse. Jumping in during that big impulse move, we have a name for that. It's called chasing. And it's a classic rookie mistake. It's driven by emotion, fear of missing out, and it is a massive strategic error. Your job, the disciplined, professional approach, is to completely ignore that impulse. Let it go. Your only job is to patiently wait for the pause. Seriously, waiting is the skill here. All right, so now that we know what we're looking for, how do we find it? Well, we use a filtering process, and the very first filter is the most important one. If a chart doesn't pass this first test, everything else is a complete waste of time. And that first filter is this. A clear, obvious uptrend must exist. What does that mean visually? It means you can see a clear series of higher highs and higher lows. It should be so obvious a child could point it out. If you have to lean in, squint at your screen, or ask yourself, is that a trend? Then the answer is no. There can be absolutely zero confusion. This is a simple binary rule. It's a yes or a no. Is there a clear trend? If the answer is no, you stop. The analysis is over. It doesn't matter how good a pullback looks, the context is wrong. So you just close the chart and move on. No trend, no trade. End of story. Okay, so let's say a chart passes that first test. We've confirmed a clear uptrend. Great. Now and only now do we move to the second filter. And this is where we start to develop a real visual skill, telling the difference between a valid pullback and an invalid one. So here's your checklist. This is what you're looking for. On the left, we have a valid pullback. This is what we accept. Notice how it's kind of slow. It's not aggressive. The candles overlap. It looks like it's running out of steam. And most importantly, this is critical, it does not break the previous higher low. The upturn structure is intact. Now look at the right. This is an invalid pullback. This is an immediate reject. See the difference? It's got fast, sharp red candles. It looks angry. There's real momentum against the trend. And look, it breaks that previous higher low. That's not a pause. That's a warning sign. So what's the logic here? Why do we accept a valid pullback? Because it's telling us a story. A valid pullback, with its slow, weak movement, is basically telling you that the sellers are weak. They don't have any real power or conviction. It confirms that the underlying uptrend is still very much in control. The trend's structure is healthy and undamaged. And on the flip side, an invalid pullback, you have to stop calling it a pullback in your head. It's not. It's a warning signal. It's the chart telling you that something might be broken, that aggressive selling points to potential or even actual trend damage. And when you see that warning, what's your only move? You reject it. You walk away, period. So this brings us to your main job for today, your mandate. You might think your task is to go out and find trades. It's not. Your task today is to get really, really good at one thing: rejection. And to do that, you have to be aware of the mental traps that are waiting to sabotage you. These are critical. You will not anticipate a reversal. You will not buy just because the price fell a lot and looks cheap. You will not try to predict a bounce, and you will not start adding a bunch of indicators to your chart to try and justify a bad entry. Your analysis must come from the price structure and the price structure alone. Let's be absolutely clear about the mission. Your goal for today is not to find a trade. I'll say it again. You're not trying to find an entry. Your goal is to go through chart after chart and practice saying no. No, that's not a clear trend. No, that's an invalid pullback. Every no builds a little bit of patience, a little bit of discipline. That's the muscle we're building today. And here's how you'll know if you're doing it right. You'll probably start to feel bored, and that's a fantastic sign. Seriously, most people think trading should be exciting. It's not. Professional trading is methodical, often boring, process of waiting and filtering out garbage. So if you find yourself getting bored while you're rejecting chart after chart, congratulations. It means you're breaking your addiction to constant action. You are absolutely learning correctly. So I'll leave you with this one question. I want you to ask yourself this every single time you sit down to look at the markets. Is your goal right now to find a trade, or is it to build a skill? Because how you answer that question will define every action you take, and believe me, it will define every result you get.